Welcome back to this very special chat with the newly appointed chairman of SEBI. Well, not quite newly. He's been around for over 45 days, Mr. Tuhin Kanta Pandey. Thank you very much for your patience, Mr. Pandey. Let me come to this T+1 settlement that we were talking about just before the break. SEBI is also pushing T+0. Will there be more of that? Because that also reduces the float, makes money more active and efficient. Will we see more of it?
Well, T+0 was intended to be optional.
Yes, optional only.
So right now, I think we will rest at that. Let it be optional.
Yes, yeah. Yes, of course. No, the system cannot be imposed, but you will try and push T+0. There is no rethink on that, is there?
No, I mean, we are neutral about it. As I said, we have brought in the T+0. It is an optional system. The technologies, etc., have been tested. So, I mean, we have to really see how the ecosystem moves and how there will be a comfort level of the wide variety of issuers and investors and things like that. And what kind of plumbing is there? What kind of problems are there? There are FPIs. How would they move the money? I mean, there are...
It's to their advantage. I mean, if they get T+0, they will get money on the same day when they sell. They should be happy, if anything.
No, that's true, but that is not the kind of thing is there. You should ask them also.
No, I did speak, and some of them were very happy.
They may have procedural issues, many of them, of trying to move the money, and different time zones are there, different things are there. I think India has taken an initiative, and our security markets continues to take the initiative in its own unique way, but we should take people along.
Okay. What about the NSE IPO? Can you give us some updated headline on that? They have come to you again. Will it be round the corner?
Well, there are certain issues which are going back and forth. I think there have been
it that co-location litigation case which is the prime roadblock?
There is, I think that is one case where I think some solutions can be found in terms of settlement, etc. And there is a technology architecture issue, then there is a governance, and then is a clearing corporation. In these, all of these things, I think there is an active interchange between the exchange and the SEBI. And we intend to look at positively forward to, not as a procrastinating device, but actually to make it happen.
Okay. But Clearing Corp, their argument usually is that BSE has been allowed. Why are we being asked to reduce our stake?
That's the point. I mean, but at the same time, we have to really keep in mind that, it's substantial, is 90% of the market share, market thing is. So we have to see keeping in view the market integrity in others, how we will basically it's a question of a roadmap. What kind of roadmap we should agree upon.
So should we expect it in a year, in 6 months? Is there anything you have in mind?
We will let you know. Frankly, it's a bit early for me to jump the gun, but there have been technical discussions on, and we'll come to a finding. But again, I said with a view to find a solution and not to permanently, park that question.
Okay. Fair enough. The other issue was, in the previous regime, there was a regulation enacted that if FPIs have more than 50% exposure to one stock, then all the granular details should be revealed. I think it was, they went through the entire stage and almost everyone revealed. But there was still a little bit of people who would have been disqualified because they did not reveal. Can you share any numbers as to how many funds have still to reveal or were disqualified because they didn't give you the final granular details? What is the amount of money involved?
This reduction in cases where
it
did not reveal the full granular disclosures as required, could not be there, and therefore their registrations were rendered invalid. This is about 1% of the total FPI AS.
Okay, I just have a couple of questions on mutual funds. One is the TER, the total expense ratio. What happens is SEBI has a TER limit, that top funds compete and they fix their TER very close to what SEBI has mentioned. So it becomes, it is not related to your performance. Ultimately, your expense should be related to your performance. It doesn't work that way. What happens is SEBI's limit becomes the limit for the market. Any rethinking on the TER?
See, first of all, I will not agree with your point that the fixation of an upper ceiling TER is a way to cartelize, because that is an upper ceiling. You can always compete. It
tends to be, is all I'm saying.
That is always competing. Now, if you see, for example, the brokerage. In the brokerage, you have an upper ceiling of 2.5%. But there are people who are offering zero also. Similarly, debt funds. If there is a ceiling of 2% or whatever, you have people offering much less.
In equity, you don't see that.
So, in equity also, the people will compete and the people will do that. So, right now, I think what we should say, we should not look at as simply removing the ceiling. Okay. Will not mean that, the people will not, you are saying that everyone is crowding around the...
Yeah, it's somehow the TER is not related to performance. It has become like that. It has become everyone congregating around SEBI's limit. Yeah, in equity, that's what's happening.
I think in many cases, people are looking at performance in a variety of ways. I think when
3 or 5
the investors are looking at returns, they are looking at... So they are not necessarily looking at TER also. So,
yeah. But they don't look at TER. They look at performance only. But I'm only saying that funds are getting away with it.
Upper ceiling is not really the reason for which, you are saying they're crowding at that upper ceiling.
It tends to be, that's what everyone fixes as their TER, somewhere close to the SEBI's limit. Okay, while on the matter, sir, there was also that, that investment product between mutual funds and PMS. We were expecting new rules to come on that special investment unit.
Yes, the new regulation framework has already been out. Okay. Now we have received 2 applications also from 2 AMCs. Okay. So I think in a matter of 10 days, we would have cleared them.
Okay. Just a final question on the market volatility. SEBI had asked previously for stress testing of mutual funds. If there was something very adverse in the global market because of tariff wars or other geopolitical concerns, would you worry about mid-cap and small-cap mutual funds? They have volume only because investors rushed in. But if there is a rush of redemptions, then there will be stress. They may not be able to pay immediately. So any stress testing moves from SEBI?
I think it's a very important question, and stress testing actually not only should be done, but actually SEBI has also got it done. Yes. For small cap and mid cap in 24. It was done, and the results have also been released. Mm-hmm. So on directions of SEBI, MFI, directions to MFI, all the stress testing results have been in the public domain. We also intend to do stress testing for others also.
Which would be?
For others. These are the small cap and mid cap, but for others also. So therefore, I think it's an important thing to know what happens. And
are you somewhat confident that if there is huge volatility, the market will be able to still function normally?
Absolutely. I think we have buffers and we have mechanisms. Just to give you an example, the kind of settlement guarantee fund which is there, that has been more than doubled in the last 5 years. And it has worked as, also our system works as more like a counter-cyclical. And, the margins are 11% plus, which is much higher than the SGX margin of 5%. We have also, as I said, the funds moved up to clearing corporation. They are lien to corporations, not at the broker level. We are securities directly getting credit, not through brokers, but directly given that. So this is another element. I think at different levels we have created. And then we have also that, CMDF fund, which is the, for any redemptions, etc., on unusual redemptions, we have that support backstopped fund as well.
So we are somewhat prepared, but of course one hopes that we don't have to use them. Finally, as you end, say, one quarter, what is your goal? What do you want achieved in a quarter? What do you want achieved in your first year?
Well, I think it's not my achievement really. I think the SEBI is a very robust institution. It carries on, and we keep overseeing the markets, we develop the markets, we do investor protection. That's our mandate, and we'll continue to improve ourselves, challenge ourselves to do better.
Okay.
With the help of every stakeholder. As I said, 4 T's, the teamwork, which is more external and internal teamwork, media included.
Okay. We'll try and pose tough questions. That may be our role. Thank you very much, Mr. Pandey, for sparing time for CNBC-TV18.